Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I'd like to chat today about the opportunities that there are in Forex trading. Not long ago, a couple of videos, I did a video titled, "Is Forex a Scam?" So if you're wondering about that, you can go back and review that video. It is a few publishes ago. But what are the opportunities? Well, what do we mean by an opportunity? Well, make money, right? I mean, that's why you would get into something like Forex, which is a trading environment as opposed to investing in stocks or real estate like I did for 40 years. Forex is a market for trading. It's a $6.7 trillion a day market. And I'm heading toward the latter stages of the middle of May of 2024, and it's $6.7 trillion a day. That's more than the combined stock markets of the United States. And that provides an opportunity. The size of that market and the liquidity of that market and the longevity of that market. There will always be the need for commerce between different countries. And that's what the Forex market is based on, international commerce. And it's that liquidity that allows you to put those orders in, whether that order is for $5 billion or $500. It really doesn't make any difference because the market is able to absorb that. So the currency market is stable, it's long-lasting, and it's highly liquid. So there's an opportunity there to take advantage of that. You kind of have to put aside all the things that people have to say about the negativity of the Forex market. 90% of Forex traders, people that get involved in Forex, lose 90% of their money in 90 days. That's a statistic that was developed by a major retail Forex broker many years ago, studying 43 million transactions over 25,000 of their clients. And they found those statistics. 90% lost 90% of their money in 90 days. And it's strange that 90% would lose 90% of their money because 72% of their trades were profitable. So what causes that? Have we got stupid people? No. We have people that are consuming the wrong education. Be aware that it's not the market here that's at fault for the bad publicity that people say the Forex market is a scam, you can't win, the market's rigged, the distributed market system, the interbank market is creating adverse advantage to the big players, and it just goes on and on and on and on. Put that stuff in a drawer and look at that market. So the first thing that I try to do when I work with people or people contact me through emails, they say, you have to figure out what the market is. You have to understand what the currency market is in order to see why it's beneficial to get involved in it. On my website, longwoodcurrencytrading.com, on the currency trading page, I list 7 reasons why I found that the currency market is the best investment vehicle to trade. And I've been studying the financial markets since the mid to late 1970s. I've been looking at the currency market since 2007 and actively trading it since 2012. Again, it's 2024 now. I've seen a lot of market action. I've seen a lot of different markets. And I was a real estate investor for 40 years. So I get money, and I get big money. Can you make money in the Forex market? Absolutely. Can you do it without the proper education? No. Emphatically no. And that's proven by the statistics that 90% of people are going to fail. And the only reason that you're failing, or they're failing, you're not failing, right? You're successful, you're watching this channel, is because of the education that they're consuming. And they get this crazy ideas in their head by watching these guys with their ball caps on backwards, driving their Lambos and talking about how much money they're making trading currencies. Be very aware of where the rotten spots are in the Forex story. Be intelligent enough to be able to watch what's going on and determine whether what they're talking about is reasonable. Can you make 300% on your Forex trading? Well, sure. What are you basing that 300% on? Are you trading a $200 account at 500 to 1 leverage and taking 3 to 10% risks, and you get it right 4, 5, 6 times in a row? And yeah, you get 300% on your money. Could you take a $300,000 account and replicate that? Maybe, but how far out on the standard deviation curve into negative land are you getting when you try to do that? Because you have to understand that what these guys are doing with these small accounts is not replicatable on the larger account sizes. And there are many reasons for that. Not time for it here, because we're talking about the opportunity. In looking at the opportunity, you have to be able to put aside all this negative stuff that's coming at you and all this false stuff that's coming at you to say, look, this is an organized market. It's the oldest market in the world. It's the most liquid market in the world. It's never going to go away. It's open 5 days a week, 24 hours a day. Where else do you get that combination of great stuff? I've just said all the opportunity there. That's the opportunity. It's the market that's the opportunity. Now, what you have to do is learn what is the market, what makes that market function, what's the problem that as a trader you would face, or the problems that you would face in solving that problem or those problems, and how would you then learn your risk management so that you could protect your money, and then how would you learn money management so that you could take the money that you have and when the opportunity is right, shove it all to the center of the table and make that thing really scream. So making 300%, maybe somebody could do that, but it's not highly likely that you would do it or I would do it. We want to have our money safe. If you really want your money to be safe, put them in a CD or a T-bill or buy the VOO, the Vanguard no-load index fund, and ride the S&P and do 8% a year. There's so many folks that look at the currency market that want to believe that they can take their $300 and make $30,000 from that in 6 months. And there's people out there that claim that they've done that. But you want to believe that because you have this need to get in there and try that. You have to have a reasonable expectation. Well, what's reasonable? Well, 8% is reasonable in both the stock market and index funds. If you're good, like you're a hedge fund manager or a mutual fund in the top 5%, you'll get 20% a year on your money. That's exceptional. That's exceptional behavior. Now you get outliers like Jim Simmons, who unfortunately just died. I think his track record was something like 60% a year for decades. So there are going to be outliers, but you can't look at the outliers to judge how you're going to be able to do or what you're going to be able to do. You have to look at where are you in a standard deviation of possibilities. So let's say that 20% is the best you could expect in stock or whatever markets, or by people that really know what they're doing from an investment standpoint. Not individual traders, but people who are bundling services for the general mutual fund guys. I mean, there's a lot of those funds that are making 12 or 14%. When they're running hot, everybody jumps on board. Now they're making 5%. Everybody bails out. They lose money. They lose confidence, and they stay at that, and then they build back up again. I mean, it's just crazy. If you want to do something, don't learn something complicated. The Forex market is very easy. It's simple. I trade based on 3 rules. That's it. each rule has an average of 3 conditions. That's it. So you've got 9 things that you have to know in order for me to trade the Forex market. Because I've been able to look at the problem of that Forex market and say there's 3 problems in what I call the life cycle of a currency position. You know, when you place a trade, you have a currency position on, and then you've got to manage that trade, and then you got to get out of it. So those are the 3 problems in the life cycle of a currency position: entry analysis, position management, and exit methodology. There's just 3 problems. Why would you go into the stock market where you have to worry about PE ratios and fundamental analysis and what the political climate is, what political stance the owners of that company have that are contrary to you, or the shit that's going on with, we're not going to invest in your mutual fund because you have companies in there that do something I don't like. What I'm saying to you about is, look, what's the problem that you need to solve if you're going to look at this market? What is it? It's, how do I enter the trade? What are the things I need to know? How do I manage that trade once it's going? And how do I get out? Now, that's really stupidly simple. Everybody's going to say, well, I know how to do that. I know how to push the bid-ask button. I know how to look at it and say, well, there's resistance here, and so maybe that's as far as my profit target should be set, and it seems like it's moving in the right direction, and so, okay, I'm going to go in. But you don't have that codified in an educationally sound, progressive structure, which we call a methodology, not a system. A system is when the short MA crosses a long MA. That's a moving average crossover system. You're trading a process. You're trading in a process-oriented manner, a methodology that is based on principles. That's what you need to be doing. That's what I learned how to do when I made the transition from real estate into the currency market. I had to change because the problem changed, so the problem changed. The principles of investing in real estate and trading currencies, the principles are the same. What do I need to know? How do I do that? But the third thing that most folks miss is, well, when do I do that? And nobody talks about that. That's the thrust of my whole way that I was able to come back from a very severe loss and start making money and having full confidence in what I'm doing to trade a 6-figure account. I don't want to lose a 6-figure account. I lose, but I'm not going to lose a 6-figure account because I understand the market. If you could just understand the market, then you could see through the clutter of hype and say, okay, when I get started, if I could just make 20% return against my bank a year, I'd be happy. So if you get $1,000, you make $200. If you get a $100,000 account, you make $20,000. And now you're looking at replacing your income at just 20% against that bank that you have. But look, there's so much viability in that currency market. You can lose your whole bank in 15 seconds if you don't know what you're doing. In real estate, it would take you 18 months to lose everything because the real estate market is so slow. But corresponding to that, real estate itself generally appreciates at 5 to 8% a year, and that depends on whether you're along the coasts or whether you're in the heartland. Heartland, it's a little bit slower in the income and the reductions when you have an economic crisis. But you can figure about 8% on a hard asset real estate. If you're in investment real estate, 20 or 25% return is probably about what you're going to be looking at. So if you're going to be doing currencies, you better be able to do better than what you're doing in real estate. I've made as much as 23% in a month against my risk. That's just me. Do I do that all the time? No. But look, if you could make 3% a month, you'd be, 30% a year. That's just 3% a month. what does it take to make 3% against your risk? Well, every $1,000 you got to make, every $1,000 you have, you got to make, well, you know, you're trying to make 30% a year, so you're doing 0.3% return when you trade. You trade 200 times and you get 60% return. So what's 0.3% on a $1,000 account? It's 3 pips. It's 3 pips on a $100,000 account. You get 30% return on a $100,000 account, you're making $30,000 a year. So if you're not doing better than 20%, in my view, in your currency trading, then you're really not getting paid for the risk that you're taking, and you probably shouldn't be doing currency trading, because you could put your money in a safer environment like real estate, or just go down to an index fund and get 8%. Don't take that risk if you can't make the better gains. What are the better gains? I don't know, 40 to 60%. That sounds just crazy stupid, but I can show you the math as to how that works out, and that math is a lot stronger than watching what somebody else is doing, drawing some squiggly lines on a whiteboard saying, oh, these are Fibonacci levels and this is how I trade. That's not how you trade, and it's incorrect. Be very careful of the education you consume, because you'll become a believer in that, and those beliefs will block out the good stuff. I have people right now, they're commenting on my videos and sending me emails and stuff, and they're telling me what they do, and what they do is nonsense. It is incorrect, and I'll try to write them back and say, look, I think you ought to relook at this. Sometimes I'm not as polite as I should be, but I say, I think you're looking at this the wrong way. You should look at it this way. And they come back with all the reasons why what they're doing is right. Okay, that's your opinion. Good luck. But don't watch my channel, because nothing I'm going to talk about is going to make any sense to you. So be very careful of the information that you consume, because it's that consumed information you will try to build your rules around, and you'll get involved in the currency market, which is such great opportunity that it won't manifest itself for you, and you'll miss out on this terrific market where you could become financially secure over a long enough period of time. Or if you don't have a long enough period of time, you're going to be dependent on income as opposed to wealth building. You can do that. You can do the income part right away. You know, I work with somebody for 3 weeks, a couple of months, and they have all the tools. Now, it's up to them to work on those tools in the organized manner in which I've presented it, in order for that stuff to work over a period of a month, and trading every day and trying to solve these problems. You only learn when you lose. So part of the training is, how do you lose and learn from it, instead of losing and just saying that the market got you. The market didn't get you, you got yourself. There's tremendous opportunity in the currency markets. Don't disregard them in your financial planning, as I think that would be a mistake, as I've proved that in my own life, that these markets are valid and provide tremendous opportunity, and they're just really a lot of fun to trade too. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.